Okay, folks, welcome to Best Stock Charts for the coming week. And you'll notice that we're doing things a bit different. What we're going to do with Best Stock Charts is introduce folks to the week ahead commentary, but in a podcast version. Meaning, if you want to get the video version, if you want to get the complete video analysis, meaning audio, video version of the week ahead commentary, simply sign up for the Contrarian Trader. You can get the week ahead commentary. If you're not interested in the trade alerts and midweek commentary, just simply sign up for the bronze level membership, $24.95, and you'll get the week ahead commentary along with the positions that we're currently holding. So what we're going to do today on Best Stock Charts, we're going to go through the overall market. We're going to do market pulse check, my thoughts on the overall market. Where are we going to be headed in the coming week? You wouldn't have normally gotten that in the past. We're going to go into greater detail on the commentary with regard to the stocks that we're looking to trade in the coming week. You're going to get my full analysis. The only thing that you won't be getting on the free version is the video review of the charts, what we're looking at, and of course, our review of our current positions and what our strategy is for the coming week. So again, sign up for the bronze level membership if you really just need the strategy session for the coming week. It's very cost effective. Okay, folks, let's get to the week ahead commentary. Let's begin things off with the economic data that was released last week. By and large, not a lot of news. It was fairly benign. The Empire State Manufacturing Index came in higher than the previous read. Business inventories were flat. And I think the big story from last week was the Philly Fed Manufacturing Index. It rose to 34.4 in May, its strongest in a year. So we're seeing a pickup in growth in the economy. With regard to next week's economic data, not much coming out. We're going to have the manufacturing PMI coming out on the 23rd. The FOMC minutes will be a market mover. Remember, that meeting was very critical, and I don't think it was ever paid the respect that it deserved because there was no anticipated rate hike, and we didn't get one, right? So it was quiet, and there was no press conference. But what I was able to extrapolate out of that meeting is that they were going to allow for inflation to run hot, and the possibility of a fourth rate hike was not in the cards, and we'll be lucky if we get a third rate hike. On Friday, we get durable goods orders. Let's get to the charts. Let's kick things off with the VIX, the Volatility Index weekly chart. We were up last week, yet we closed well off the highs of the week. No breakout. You can see that we have resistance right at the 14 level. It was support. It is now acting as resistance. The 10-year yield, it rallied and rallied strong last week, but it sold off. We had a breakout on a weekly basis, and still technically it was a breakout because we put in a new 52-week high, but we closed well off the highs of the week, and this dotted blue line here represents a resistance level going back well past the time frame on this chart. So probably going back to early 2014, late 2013, we had resistance right where we closed last week. So a good week, yet we could not hold the gains. Now, we did break out on Ultimate Oscillator. You can see that we broke out above this upper band of resistance. Stokes stalling out here a little bit. Possible lower high. We did not get the confirmation we were looking for on the stochastics that we might expect with the 10-year yield pushing higher to greater than 52-week highs. We're talking about multi-year highs on the 10-year yield, yet Stokes, very, very lackluster. So a warning flag is on the track. RSI did, in fact, put in higher highs last week. So the bias, of course, is going to go to the bulls. We're bearish bonds, bullish yields, because the path of least resistance right now is to the upside. But we're seeing signs here of a little bit of weakness. The U.S. dollar weekly chart, we had a continuation breakout last week, and we were stopped at the 93.74 level, and we sold off to close at 93.54. So not that far off the highs of the week, a fairly bullish week. Now, I spent a lot of time last week on StockCharts Today, which I publish each morning, going over the pre-market activity, and I mentioned, beware of the U.S. dollar. It's acting strong, no doubt about it, but we're seeing signs of trepidation, signs of stalling action, despite the fact we're closing higher each day with higher highs. The problem is that we were closing off the highs of each day. I'm going to go to the chart of the dollar bull ETF in a moment, and we're going to review the price action versus volume action. This chart here is the Dixie, the DXY. Or if you're using StockCharts.com, type in $USD. So our MACD week over week is still rising. So the probability still favors bulls. No doubt about it that we are going higher. RSI, very strong. Now, when you go to the dollar daily basis using the DXY, and again, I'm going to go over the UUP in a moment. You could see that each day last week, we closed off the highs of the day. Every single day, we closed off the highs of the day. That's a sign that you have selling into resistance. Doesn't mean to go selling your position. No, not if you're longer term bullish on the dollar, but there's an opportunity here to pick up emerging markets, gold, the gold miners for a short-term pop if you're looking to swing trade them. Book your profits, move to the sideline quickly because the higher level view of the dollar is up. Let's take a look at the dollar bull ETF. Okay, so here's what I'm talking about. All last week, now we opened up strong last Monday, gapped higher on Tuesday, but take note of these candlesticks. These are signs of indecision. Not what you want to see when the dollar is nearing a resistance level. Also, while we had strong volume at the beginning of the week, volume dried up dramatically, as you could see here, on Thursday and Friday as we made new weekly highs and rallied into resistance. So, what are the probabilities, absent a news event, sending the dollar higher, that will allow the dollar to move through resistance? There is news out of China that they've reached some sort of an accord. The dollar has been moving higher during these trade talks. When it's perceived that the trade talks are over or near conclusion, the dollar has sold off. So let's pay close attention to how the dollar opens up this evening in Asia. Members, I'll be in the forum later on this evening with my notes of anything exciting is happening. Now, why am I spending so much time on the dollar? It's because we have commodity positions that are influenced, heavily influenced by the strength or weakness of the U.S. dollar. Members will talk about those positions later on. The Dow Transports. I've been speaking about the Dow Transports for a few weeks now, and we have broken out. We broke out the week of April the 16th on this weekly chart. We pulled back, retested last week. We had a continuation breakout, closed higher, but we did close off the highs of the week. What we're looking for here is a rally up and through 10,839 and a close there. That sets the stage for a rally up and into the prior highs last seen back in January. Volume last week, below average and declining. A bit of a concern. So the transports still looking good, though. Net odds favor bulls. Weekly chart, Dow Jones Industrial Average. We broke out the week of May the 7th. The last week was a down week. We did put in a new weekly high, but we couldn't rally and close above the 20-period moving average, which is now flattening. Now, down volume last week was very light. And when you take a look at a chart of the Dow Jones on a daily basis, I'll tell you, this is a pretty setup. I think that we are moving higher. Why? It's because we have a nice breakout above the 24,400 level. We did that 2 weeks ago. The only thing lacking was volume, and as we closed on Friday, still very light up volume. But for most of last week, we were in a consolidation. You want to call it a bull flag formation, you want to call it a pennant formation, triangle formation, I don't care. Call it cupcakes, it doesn't matter. It's a continuation setup, and it looks as though we are going to break out higher this coming week. Take a look at your Stokes. They're beginning to hook back up. RSI appears ready to hook back up. I'm not as bullish on this RSI as I am on the Stokes. So Dow Jones daily basis looking good. The NASDAQ comp a down week. We did put in a new weekly high, but we couldn't hold it. RSI continues to put in lower highs. This is a concern. Let's take out our crayon, draw a trend line, because I suspect something is afoot here, and it could be a breakout and a retest. Let's confirm it by drawing our line down. Okay, so we do have a breakout on a weekly basis. We did pull back a couple of weeks ago here and did a retest of the breakout point, and we continued higher. Last week we nudged down along with price. That's expected. So the trend is still higher on RSI. Volume did rise. It was above average last week. So we saw some distribution by institutions of the tech names and biotech names. Stochastics. Let's throw up a trend line, see what we're doing here. No breakout yet on Stokes weekly basis. So the jury is out on the NASDAQ composite. The S&P 500, very similar to the NASDAQ, but the NASDAQ RSI is stronger than what is the RSI on the S&P 500. Now, we did break out 2 weeks ago, along with price on RSI. We pulled back last week and retested. It's going to be really critical this week to get a breakout. Volume last week to the downside was very light, so that's good stuff. We did get a breakout. We don't have this on the NASDAQ, but we do have it on the S&P 500. The stochastics are, or have, I should say, broken out. Good stuff. The IWM, the small caps, we are long of the TNA. That's the Direxion Leveraged Bull ETF. We booked half profits on Friday. We had a roughly about a 10% profit in that position. We took some of those profits off the table. We're still long of the small caps. Now, we closed out last week with a bullish reversal week. Really good stuff. So, add to that, we had a bullish key reversal on the week and a new all-time high. Outstanding price action. Why do we book profits then? Why do we take some of our money off the table? Look no further than volume. Volume is very light. Taking a look at the Stokes, absolutely beautiful stochastics. A W formation, a higher low, and we broke out. MACD went positive. A really outstanding week last week. The problem is volume. We need more volume. The micro caps also a new all-time high last week. Really outstanding price action. We closed right at the highs of the week. So here's the problem, though. We are at the upper band, the extreme upper band of this trading channel. So while I'm very bullish on the small caps and micro caps, just keep in mind, they're a bit extended. Volume last week on the IWC was very, very light. The microcaps, very light volume. The Stokes, very similar to what we saw on the small caps. A W formation, higher lows. We broke out. Really good stuff. The semis, they broke out the week prior to last. Last week we had a hollow-filled candlestick. I read into that there is indecision. We may bounce around here for a while. Volume was up, well above average. I think we have a little bit more consolidation to do here on the semis before they move higher. Taking a look at oil. Oil had another outstanding week, but we did close off the highs of the week, and we are nearing the 200-period moving average on a weekly basis, as noted in red. Now, we will probably rally up and into it, but this 200-period moving average, which is declining, is going to act as a declining ceiling. So, let's keep in mind that oil has had a heck of a run. But if oil stalls out here, so will energy, which has also had a heck of a run. Let's go to that chart. Here's the IXC, weekly basis. An outstanding week, but you could see, much as how we traded last week on oil, meaning we closed up, but off the highs of the week, you saw the same exact price action on the IXC, the energy services sector. Volume, outstanding these past couple of weeks. Really tremendous. Big money rotating into energy. The utilities, absolutely devastated last week, down 2.75% on the week as yields broke out to multi-year highs. I'm surprised the utilities weren't down further. Volume, though, was very, very light. And you could see that we closed down below support here at, let's call it, the $49 per share level. If we get a new weekly high, in all probability, we're going to come down and retest prior support at $47 per share. Housing, a down week last week, still unable to rally and close above resistance. The one good thing, it's really the only good thing that I saw last week, was that we rallied off the lows of the week, and that's pretty much it. As yields rise, folks, it's going to be very difficult for the home builders to find footing. Now, we've been consolidating for the past several weeks. What we should do here is add a new support level. Be right back. Let's update this, add a new level, and there you have it. 300 on the HGX, the housing index. Next chart up, the biotechs. A good week last week. A continuation move higher, and in fact, a breakout. Let's update the chart. And there you have it. The only problem I see, and it's a serious problem, is there's no volume. None. It was a horrible volume. Stokes are looking good. MACD looks poised to go positive. I like the setup here. I don't like the fact that we have to get through two major moving averages, the 50-period and the 200-period moving averages on a weekly basis, and there's no volume. So a bit of a concern there. The banks, I want to buy the banks. I don't want to buy the money center banks, so it won't be the XLF. I'm looking at the DPST. In fact, I'll go over the DPST, which is the leveraged ETF for the regional banks. I want to own the regional banks. More to come on that. Looking at the sector as a whole, we saw a down week last week, really underperforming the market despite the fact that yields are rising. Think about that. The banks should be doing better in this environment, but they're not. Why should they be doing better in this environment? Because of the acronym that applies to their business model, NIM, net interest margins. They make more money on their loans when yields rise. So I am not excited about the banks. I may be more excited about the regionals when I check out that chart in a moment. Okay, now let's segue into the stocks that we're watching for the coming week. We're going to kick things off with the DPST. We just discussed the banks. I mentioned DPST. Now remember, the banks were unable to break out last week as a whole, meaning the money center banks, which heavily weigh in the XLF. But when you take a look at the DPST, the regional banks, these banks rely less on trading and more on making loans, making their NIM, which I just mentioned, net interest margin, far more relevant to earnings because they're not reliant upon trading revenue. And they put in a new weekly high last week, and they even closed there. While they did close off the highs of the week, they did put in a new weekly closing high. That's significant relative to the XLF. So this is why I am very interested in buying the DPST. I'm very bullish on it. Volume, very light last week, and a concern, no doubt. Both lines on Stokes back above the 50 level. So we'll use any pullback as an opportunity to begin building a position. Now, earlier I mentioned that we booked some profits on the TNA, and there were several reasons why we did that. Now, we didn't go over the daily chart of the small caps. I'm going to go over the daily chart right now and discuss what I'm looking at and why I decided to book some profits. So this is not the only reason, but it was a partial reason. We saw very close to a doji star formation. That's a sign of indecision. But in reality, it was a hollow-filled candlestick. And I don't like to own stocks or ETFs when you see a hollow-filled candlestick at the very high of a trading range. Add to that the fact that while the IWM, the tracking ETF for the small caps, broke out to new all-time highs, the TNA, for whatever reason, did not. Now, in all probability, that has something to do with the balancing of the TNA relative to the IWM, so I won't read all that much into it. Lastly, volume was absolutely horrible on Friday. So concerning, to say the least, that volume was that light. So that's why I did it. Would I buy it back on a pullback? Sure. But before I did that, what I want to see was the S&P 500 moving higher as well, so that we have a broad-based rally. So we're looking to buy back our TNA on a pullback. The first chart up that we're looking as a new position is Costco. I've been talking about Costco. It did have an intra-week high last week, but it didn't close there, so no breakout on a weekly basis. Volume was very light last week as well. Daily chart, we were down on Friday. We became a little bit overbought relative to the Bollinger Bands on Thursday. Friday, nice pullback. We retested 198. It held. We rallied off the lows of the day. So despite the fact that we were down on the day, it was still not a bad day. Stokes rose. RSI pulled back. That's to be expected. Volume on Friday, very light. I like Costco. I think we're breaking out this week. Align Technologies weekly chart. We discussed this one last week. I was bullish on it. We had a continuation breakout last week. We pulled back, retested support. We have a continuation move higher on Stokes and on RSI. Volume last week was pretty good. It was about average, slightly above. Daily chart. We're a bit extended here. We can move higher. RSI above 70 now. Very sexy. You're going to read books out there, folks. They're going to tell you sell stocks or short stocks. Once you get RSI above 70, 80, you're going to go broke doing that. These shares, in all probability, are moving higher. Stokes hooking up, looking really good. Align, very nice chart. Kohl's. This stock is actually a recommendation from one of our members, Rakesh, and he posted this in the forum, and he wanted some thoughts on it, and I was thumbs up all the way. I love this setup. Talk about the mother of bull flag setups here on a weekly basis. We have topping action above, no doubt, but I'm looking at a stock that, you know what, if you wanted to scratch the itch, you could scratch the itch. Buy a few shares, then add more on a breakout. Use a stop right down below this support level here. Daily chart. A beautiful setup here. We have the 50-day moving average, which was flat. It is now rising. An orderly pullback on light volume. I think we're breaking out very soon on Kohl's. I'm bullish on Kohl's. I am not usually bullish on retail names, but Costco, Kohl's, bullish on, looking good. JCPenney, avoid like the plague. Tal Education, I spoke about this one last week. We had a breakout, and we had a continuation move higher last week. Net on the week, we're up only 0.9%, but an up week nonetheless. Stokes are rising, RSI rising. Volume was very, very light. So we're still bullish on TAL, and we're looking to put on a long trade. Daily chart. Here's a concern. Friday's price action, topping action, right? We made a new weekly high on Friday, yet sellers moved in. And they took it off the highs of the week. Now, you still have RSI and Stokes, which are rising. So that's bullish. So it may take a day or so to work off this topping action. We'll trade sideways and then probably move higher on TAL. GOOS. Canada Goose Holdings. We were bullish on it last week. We had a continuation breakout later in the week. A very strong move, up over 10% on the week. Now, several of you members got long of GOOS, and good for you. You made a nice profit last week. I did not. I was concerned about the weakness in the market early in the week, so I got into my own head, I think, and missed this trade. But pullbacks can be bought. Daily chart. A nice day on Friday, a bullish key reversal on the day. Volume very strong throughout the week. I really like the setup here. I think we're moving higher on GOOS. Bayozun weekly chart. I spoke about this one last week. We expected a breakout. We got the breakout. A bullish key reversal on the week. Most of this came on Thursday and Friday. Yep, daily chart. Thursday and Friday. Back to the weekly chart. Now we have a breakout on Stokes. RSI has broken out as well. Both are moving higher. Volume outstanding last week. This is serious institutional distribution. Daily chart. A bullish key reversal on Friday after we broke out of this trading range. So we have a continuation move. Volume very strong. So the daily chart's looking good. Bayozun is on our watch list. Now, I'm going to talk about TCP Partners. We traded this extreme oversold stock several weeks ago, and we still own it. It's a big dividend player. We got it at a bargain, so we decided to hold on to it. So why were we interested? We were interested in TCP Pipeline Partners because we had an edge. And the next three stock charts have the same edge setting up. Now, what was our edge back here? It was the fact that we had RSI in the low teens. We rallied. I said, forget it. It didn't hit our support level that we wanted to buy it at. We traded this actually twice. We booked profits quickly back here. Then it sold off hard. I said, forget it. We're going to walk away. If it doesn't come to us and hit historical support, we will not trade the shares. I was expecting a cut in the dividend, and we got the cut in the dividend. And that is what occurred here, the repricing of the shares. We knew it was coming. And then on that news, we bought the shares. And it was right at, or just above, I should say, not at, historical support right here, the week of April the 30th. The last time we were at that level, let's pull back to a monthly chart, was back here in June of 2010. So we had the short covering rally off of the bad news. And this is funny. This is a perfect example of why the little guy, the small investor, loses money. They sold their shares on an announcement of the cut of the dividend, and that's when the big buyers stepped in and bid up the shares. And I was saying to wait for that dividend cut. They announced the cut of the dividend, and the shares rallied after the initial knee-jerk reaction, which was bearish, and knee-jerk reactions have been proven time and again to be the wrong reaction. So, first chart up, weekly chart, AMBEV. Let's go to the daily chart first, actually. Daily chart, RSI at 15.89. Now, we did bounce on Friday. While it was a down day, we did bounce off the lows of the day, and there was support there going back to July of 2017. Now, could Friday have been the bottom? Sure, but this is not oversold enough for me. Besides the fact we still have massive selling, massive institutional distribution of the shares. I'm not going to fight these guys. This is not mom and pop selling 100 shares. That's not how these volume bars are created. You have rising sequential down volume bars in the millions. Again, not mom and pop selling 100 shares. We have the 50-period moving average, which is declining. It will take out the 200-day moving average, absent an act of God, which, were to occur tomorrow, means nothing. It's already priced in. Now, if the shares rally off of support, which they just may, meaning Friday's lows, well then, expect a sell-off when this rollover, when this negative divergence occurs. But what we're looking for, you're not going to find on a daily chart. You need to pull back to a weekly chart. We're looking for support down here. This is our ideal buy point. The lows of June of 2017. And I think that we could get there. Look at this volume last week and the week prior. Huge. So let's not fight the institutions. They will win. Allow the shares to come to us. Why is it important for us to wait for this green line to get tagged? The reason is that we know through history that this support level, as proven here in March of 17, as proven here in June of 16, as proven here in December of 14, there are buyers down there waiting in reserve to help with our bid. Those are the guys that will keep a bid, a floor, under our buy point. And if it fails, if it breaks down below that support level, we're out. More to come on AMBEV. The next chart up, America Mobile, weekly chart. Let's do the same thing. Let's go to the daily chart first. Let's discuss why we're interested, and then we'll go to the weekly chart. AMX daily chart, RSI 18.92, barely makes it onto our screener. Were it not for it being a large cap name, I would ignore it. Now, unlike AMBEV, we do have some support here, last seen back in November of 16. And while we were down on Friday, we did rally to close 1 penny above that support level. The prior support level, 1634, we closed at 1635. Friday's lows was 1618. So, in the short term, this may hold, but it's not the support level that we most desire. But it may hold because volume is dropping off dramatically to the downside. Ultimate oscillator is now rising. Now, what is our ideal buy point? Weekly chart. Here's key support, but our ideal support level is right down here. The lows last seen back in July of 2017. There is a history of this being a significant support level to be defended. You saw it back here. September 15, you saw it back here, August 15. That is our buy point. Volume last week, above average. The next chart up, we'll begin with the daily chart. Campbell Soup, daily chart. This is a victim of the trade tensions between China and the U.S. With the news over the weekend that the Chinese have accepted a $200 billion increase in imports from the U.S., Is that going to be debunked by tomorrow morning? Will they come out and deny it like they did last week? Who knows, right? But that's the news as I know it right now. Tomorrow's another day. You never know what the trade negotiators are going to leak to the press. So we did gap down on Friday. We traded down below and closed below not just the 2 standard deviation Bollinger Band, but the 3 standard deviation Bollinger Band. Now, when you add to that the fact that you have RSI at 17.11, sexy stuff. That doesn't happen every day. Now, volume, over 30 million shares were traded on Friday, was significant. Again, not mom and pop selling 100 shares. This is Fidelity. This is Goldman selling shares. You don't want to fight these guys. Do I think that there's a short-term pop coming? No doubt about it. The question is, what is the best risk-to-reward entry point? Great question. Monthly chart. I'm liking the lows last seen back in November of 2013, a long time ago. Look at the volume so far this month. Massive institutional distribution. At current, we are down nearly 16% in 1 month alone on a low beta name. Okay, now let's segue into our positions that we are holding. What is our strategy? Let's begin with Second Sight Medical Products, EYES. We were up nearly 15% on this trade last week alone. We had a breakout on both